one of the management joining us, Varun Gupta, whole-time director, Ashiana Housing. Varun, hi, morning. You gave a guidance of nearly 2,200 crores in terms of pre-sales, did around 358 crores in the first quarter. Are you able to meet that guidance, or are you going to see a heavy second half that will help you meet that guidance?
Hi, I think we should be able to meet the guidance. The plan has been skewed anyways towards quarter two and quarter three. Quarter two, because a launch of a Ashiana Oma project will get recorded for sales. Then we launched it in the month of June for expression of interest. It's a large project with about 280 units in two phases that we are launching. And in Q3, it might be Q3 or Q4, we are planning to launch the last phase of our Ashiana Aruham project in Gurgaon. Both those together will contribute significantly to our sales, and the pre-sales guidance of 2,200 crores remains.
What are the key factors behind relatively softer bookings in the first quarter?
So two things. One, in Jaipur, we don't have really a significant amount of stock to sell outside of the Ashiana Oma project, and the team was also concentrating towards that. So there is a timing gap in the quantum of sale that, let's say, Jaipur would record getting skewed towards Q2. And in Q1 last year, Jaipur had significant contribution. And second, in one of our other markets, which is Bhiwadi, we are out of stock in the premium homes category, which had a very significant, like 150,000 square foot contribution in the Q1 of last year, which is Ashiana Tarang, which is also sold, mostly sold out. So we have really no stock left to sell there effectively. So that has been the biggest driver of a little bit of softness in the Q1. The good part in Q1 is the company is pivoting towards senior living as a larger product. Let's say over the next 3 to 5 years, we would like to make senior living 50-60% of our business from about 20-25% of our business right now. And in that perspective, the senior living sales during the quarter were about 130 crores plus, and which is a good sign. We are on track to continue to grow the senior living overall annual sales. Last year, we did about 569 odd crores, if I remember correctly, in the year, which we will be growing this year. And that's going to be the big growth driver from a long-term perspective in the company.
And how's the execution pipeline looking for you, at least in the current year? I'm not talking Q1 because maybe you're on silent period where that is concerned, but talk to us about FY27 as a whole.
So FY27 as a whole, we have given what all we expect to deliver in our deck. I think our revenues are expected to be close to a tad bit short of 2,000 crores total if we are able to meet our targets of deliveries. Q1 was a little soft because all we have delivered is phase one of Ashiana Nitara project, and that is also a very small project, which we have already given in the update as to what the delivery has happened. But there are lots of projects which are scheduled to be delivered over the year. We are generally on track to deliver them. Construction is progressing as per schedule. Sometimes, if anything, I think more than construction, slippages in getting OC from the government would be the key aspect that we need to ensure that we're able to get that. If we get that, then we will be able to meet our revenue guidance for the year as well.
And give us a sense as to how labor shortages, etc., are playing out. Would that at all delay execution? Are you seeing that as a possible challenge on ground, at least at this point? Has it improved at all over maybe the last few weeks? Because that's what we're hearing.
Okay, so over the last few weeks, things have certainly improved. Overall, labor availability has improved. Also, material supply availability had improved. We were a little concerned in Q1 with how things were going because of both supply of materials and worker availability overall in the market. Things have eased, and as of now, if the current situation continues, I think we are on track.
Can you also give us a sense of, you are betting big on senior living segment. What is the kind of launch pipeline that you have there, and maybe over the next 5 years, what kind of revenue contribution that it will have to your top line?
So right now in senior living, we have four operational projects, and we have five projects to launch over the next 18 to 24 months. We have three in the Bombay Pune region, one in Chennai, and one in Bangalore. As of now, we are scouting for five, six more projects to add over the next 12 to 18 months. Over the next, let's say 3 to 5 year, let's say FY30, we would be expecting senior living to do 1,500 crores plus of pre-sales within FY30. So from 569 last year, so let's say in a 4 year time frame, we would expect it to nearly triple.
And what are the margins looking like in terms of how do you expect those to shape up? Senior living gives you better margins, if I understand that right?
Yes, so senior living in general gives better margins, and the other reason to be in it is we think it will be less cyclical than the other regular residential business. So we expect margins to be stable there and not oscillate too much because of the sort of brand we have built and the kind of positioning we have built in senior living over the last 20 years. And overall, as I would say, the margin profile in the company in general should improve year on year. This year's margin should be better than last year's, and FY28's margin should be even better than FY27 on a reported basis. Uh, just because the projects that are coming up for delivery in general have better margins than what the projects were delivered, let's say, last year and the year before. So we are in the zone of overall margin expansion over the next 2 3 years.
Right. And my analyst tells me that you've revised the delivery timelines for Amara Phase 1 and Anmol Phase 3.
Yes.
Has there been a delay there? What's the reason for that? What's the likely impact on revenue, cash, etc.?
So from a full year basis, they will have very little impact because we are just moving it from one quarter to the other. The projects are complete in terms of construction. We have been facing challenges in getting OC. I think we underestimated the timeline that it'll take to get occupancy certificates. So which should come in the next quarter, and we should deliver on that basis. The projects are fully ready in terms of construction.
Also, if you can give us a sense of the kind of cost escalations that you have seen, inflation that has hit you in the last couple of quarters. There have been flux with respect to labor, product, material costs have gone up. How are you managing that cost as well?
So the costs are they are what they are. I think annual inflation for us has generally been in the 4 to 5% range. I would expect this year to be closer to 8 to 10% because of these other shortages and that has happened. So material prices have gone up. We do expect them to come down after a quarter or so. Let's see how that happens. My expectations would be as crude has come off, as gas supply improves, as labor supply improves overall. Hopefully, the kind of inflation we have seen in the last quarter will not sustain. But we'll get to know that in a quarter or two. That said, even with that, I think margin expansion is expected because the projects were sold at good prices. We did get a lot of inventory gain on our land stock, and that is going to sort of play out over the next 2 3 years.
Varun, thank you so much for coming in and speaking to us.
Thank you.